Hello, guys. Gold Sniper here from XAUUSD, and let's begin our analysis for tomorrow, which is 24th July 2023. But before we begin our analysis for 24th July, let's just go through the analysis which I gave on for Friday, which was 21st July, and I had told two things that gold has given a correction as dollar index has given a breakout and it has strengthened. Okay, so you can see the dxy. If I'll take it, okay, this is on the hourly basis. If I'll show you, dxy has started rallying. Okay, see here. So dxy is right now making higher high, and the next resistance on the dxy is somewhere around 104 101.4 to 101.6 range roughly. Okay, so dxy going up is actually a negative for gold, because when dollar strengthens, all the other currencies and commodities, okay, their price falls. Okay, so that's the reason why the dollar weakened. Okay, but one thing I will tell you, which was my second point, I will take out. So I told you that as long as gold is above 1960, we will follow buy on dip strategy, and also for confirmation, we'll look for euro for entry. So if I'll show you the first thing on an hourly chart, if you will see, yesterday I had given my first trade, which was around like 1970. I had given. Okay, so I'll just shorten the time frame to show you. Yeah, over here I had given, okay, the buy call. Okay, gold, tried many times to go above. Okay, buyers tried very, aggressively to defend this place, but okay, finally it gave a breakdown. Okay, so gold came till 1968. Okay, barely hit our stop loss, but then again gave a bounce back upwards. Okay, after that finally it gave a breakdown. Okay, which was here. So the first trade ours was got hit by stop loss. The second trade I had given, I told you, buy between 1963 to 1958, stop loss 1957, for target 1965 and 1970. But what happened is, in midway, like somewhere before the American, just before American session started, I told you to exit the trade, because I had a feeling we could see this sort of downfall from the right here itself. Okay, and this type of fall happens in American session. If you will see, in the past also it has happened many times. Okay, I'll just show you some place where such fall had happened. Okay, that area, I remember it was somewhere around like 1920 place. I'll just show you. It's a bit far back, but you can see here. If you will see the time over here, this was Indian time, I'm telling you, somewhere around 5 o'clock. After 5 o'clock roughly, the American session begins. So gold was consolidating between 1925 to 1923, and operator gave a sudden fall, created this artificial fall so that he could accumulate the quantity, and then he reversed the market. Okay, so similar type of artificial fall I was expecting that in the American session it could give, and I did not want your stop losses to get triggered because of the operator. That's why I told you to just close the position. And when the price started going up, I told you guys in the Telegram that it is basically a trap. Operator is gonna hit the stop losses, and exactly what happened. Most retailers had their stop loss. First, I'll tell you what the operator did. Operator took the price from 1963 to 68, thereby hitting the stop loss of all those retailers who had shorted between 1960 to 63 range roughly. After that, this when this gold gave a breakout like this, if you will see from a retailer's perspective, okay, if you will see, gold gave a breakout. This was the breakout. Okay, this was the breakout, this was the pullback. Okay, and gold is continuing its rally. So most retailers would have got fooled over here that, okay, gold has given a breakout pullback, now it will go up. But this was nothing but an operator's trap. And that's what we need to be careful about in the American session, that the operator can trap you. And I had warned, forewarned in my Telegram channel also, be careful, this is a trap. When you see this wick here, was operator's entry. Operator first moved the market up and then reversed the market, and see, he hit all the stop losses of retailers, as you can see here. My third buy call was somewhere over here. It was based on these wicks, which if you will see, the wick over here, I felt that operator must have made an entry over here. Okay, and gold did not hit our stop loss, and it gave a good 50 pip move from here. And after that, operator one made one final ditch attempt to hit the stop losses of retailers, and then the market again came above 1960. So if you will see the level which I told you, 1960, gold respected that level. It did not close below. Today it did not close on Friday, it did not close below 1960, it closed above 1960 level. Okay, so that is still a bullish sign. And if you will see on a 4-hour chart also, we are still within the channel. We have not given breakdown below the channel. Okay, we are still inside this channel. So what can be done for tomorrow? For tomorrow, I'll tell you one thing. We are still inside this channel, and we are above this 1960 level. What I am predicting is that we should give a move upwards, or option number one is we could give a move towards the upside. Okay, or option number two, what is possible is that operator can give a false breakdown tomorrow also. Okay, and he can take the price somewhere like 1955 or 1950 also. This is also a probability. Operator will do what, in by the evening he will give a breakdown till here, and then he will reverse the market like this. Okay, create a sort reverse the market and create a sort of like a head and shoulder pattern and reverse the market. Okay, this is highly possible. Okay, this thing which I'm talking about, it happened here also. I'll just show you. So this was when gold gave a breakdown below 1900. That was that area I will show you. Not here. This is 4-hour charts, right? So during this channel, yeah, so somewhere down here, yeah, if you see here, this was when the gold gave a breakdown, okay, briefly below 1900. Okay, the operator gave this breakdown so as to force retailers to cut their positions, hit their stop loss, and force other and make other retailers think, oh, now it's a breakdown. But reality was he created this artificial fall so that he could take entry at a very good price, and it formed a sort of like a head and shoulder pattern, and after that we got the breakout. So similar thing is possible below 1960. If price comes below 1960, do not immediately go and short it. Remember, this could be just an operator's trap. So but we have to see, is it giving a close below the channel on a daily basis or not. If it is not giving a close on he can create an artificial fall in the evening session, but we most probably he will reverse the market and enter the channel again. Okay, we just all that we need to go above is one good news, and the FOMC is coming in the interest rate decisions, and the FOMC meeting is there next week. So that could be the trigger which could push gold to 2000 levels. Okay, so that's my analysis for tomorrow. As long as we are above the channel, we will use buy on dips. If if we break below the channel, we will try to capitalize on the operator's game. When he shorts, we will also short. Okay, to make very good quick money. And when he reverses the market, or if our stop loss gets it, we need to be prepared to re-enter the market. So some basic things I wanted to cover other than this. Okay, is that first of all, some I want to just reiterate some basic rules. Okay, the number one rule which I have, based on the Telegram channel, which I created, some basic rules, a whole lot of people are still not following. So I'll just repeat those rules. First rule is that you should not risk more than 1% of your capital. So I'll just write it down. You should not risk more than 1% of your capital per trade. So that works out. If let's say my capital is $1,400, okay, example I'll tell you. if my capital if my capital is $1,400, then I should not risk more than $14 per trade. That's the golden rule. You see what your capital is. If your capital is very small, like somewhere around like $100 to $200, only for those people I recommend take 2 to 3% risk on your capital, not more than that. But for the rest of the people who are sufficiently capitalized, just 1% of your capital you should risk per day. Second thing I will tell you, you should not take more than 2 to 3 trades per day. This is a general rule, okay? But we need to keep our number of trades less. Okay. Third thing, our main objective is to protect our capital. Okay, we need to protect our money, and the secondary objective, when the first objective is achieved, is that we need to focus on growing our capital. So these 3 points I told you. Fourth thing I wanted to tell you is that we are going to do a slight change. Normally how I give a trade is like I'll tell you like buy between uh, you know my trades are normally like layer buy between 1960 to 1956, stop loss at 1955 for targets of 1965 to 1970. So this is the ultimate view which I told you. Based on that, this trade is given. Okay, but what I want you to do is what I will be going to do from Monday onwards is I'm going to scalp these profits. So basically, each layer I will just target 20 to 30 pip move. So let's say I created a layer between 1960 to 1956. So in my first layer, my target will be 20 pips. That is around $20. That is around $2. Okay, so I am assuming the layers are 0.01 each. So from 60, if I entered at 60, my target will be 62. For 59, it will be 61, and so on so forth. Okay, because I have noticed more than 90% of the time we are easily able to get 20 30 pips more, even though ultimately it might hit stop loss, but 20 30 pips very easily we can get, and we are going to scalp once or twice the areas which I have mentioned. Okay, and then we'll wait for more opportunities. All right, so this is my fourth point that I'm covering with you guys, what we are going to do for Monday. And the more detailed plans I'll be sharing exclusively in my Telegram channel. So you guys can, I'll share the Telegram channel link on my video's description. You can click there and join my Telegram channel. And other than that, if you want my that plan which I share freely on my Telegram channel, please do subscribe to my Telegram channel, and please like this video so that this can get more reach. If you are liking my analysis and if you want to encourage me to make more such videos, please like it and share my videos. And if you have any queries, you can comment on my YouTube channel as well. You can, if you join my Telegram channel, there also I can clear your queries as well. So that's all for today. Thank you, and then have a great day.